Couldn't see the nerves here this morning, but they were feeling them.
A lot of people are saying this is not nearly enough. Well, the Fed has to take some measured steps here, and this is a big first step. We'd like to have seen it maybe a few weeks earlier.
Whatever anyone says, this is an economy that is feeling the strain. A day like today is all about confidence, or rather the lack of it, on trading floors like this. There is a real fear amongst some economists that this country is heading towards a recession. Now, the big question is whether or not the shock therapy of today's interest rate cut can help allay the effects of that fear. Off the floor and onto the streets, and to a Manhattan car dealership to find out how this is playing in the real world.
Customer coming in here looking at a particular car is very cautious, more cautious than normal, and very accurate of what he wants. He's done his homework on the internet. He wants to make sure that he really is absolutely positively getting the greatest deal he can.
Of course, the big story today, behind the ups and downs of the markets, is what shape is the US economy really in? If it is sliding into recession, can anything stop it? And what impact would a crisis in the US have on ordinary people around the world?
Before that shock interest rate cut in the US, markets around the world had continued to slide. In Japan, leading shares closed 5.6% lower. In China, shares plunged by more than 7%. And Indian shares, after that suspension, were down 5%. The US interest rate move came before the close of European markets. Leading shares in Frankfurt ended unchanged after earlier volatility, and the London market closed up 2.9%, recouping more than half of its losses from yesterday. So the question now, has the Federal Reserve's economic shock treatment done the trick? Will it stave off a US recession?
There are some big problems in the US economy right now. The housing market is in recession, consumer confidence is at its lowest level for over a decade, and there are big question marks about the performance of the economy in the longer run. And I think the rate cut is a welcome development. Certainly the situation would have been a whole lot worse without it, but I think it's very unlikely it will fix the problem in the near future.
So what would a US recession mean for British companies like this? Acme Whistles in Birmingham does nearly half its business with American customers, so any downturn across the Atlantic will mean falling order books.
That will have a serious knock-on effect for the number of people we can employ, jobs, the amount of money we can pay to the people we are employing, and therefore the amount of money they can go out and spend in the shops. The knock-on effect will be there, and we're very typical of the way it's transmitted from a downturn into the United States to a downturn in the United Kingdom.
So orders and jobs here could be at risk, and that could push the British economy into a sharper downturn. The Bank of England will be keeping its finger on the pulse. The odds of an interest rate cut here next month have shortened.